Good afternoon, everyone. My name is Andrew Demers. I'm the Communications Director here at the New Hampshire Insurance Department. I'm joined by my colleagues, Commissioner Bettencourt, our Property and Casualty Director, James Fox, our Consumer Services Director, Robin Tierney, and LuAnne King from our Property and Casualty Department. And I wanted to welcome you all to our webinar discussing how you can better understand inclusions and exclusions in your policy. If you have any questions, we encourage you to type those into the chat box, and our subject matter experts will address those at the end. Without further ado, I'm happy to turn it over to our Commissioner, D.J. Bettencourt.
Well, thank you, Andrew, and thanks to everyone for joining us this afternoon. We are pleased to once again be doing our monthly webinar series. For those who have watched our programs in the past, you know that one of the things we really stress to consumers is to better understand your policy, to improve your insurance literacy. And one of the key components to that is to understand what the inclusions and exclusions are in your policy, which is to say, what does your policy cover and what does your policy not cover? Now, that may seem straightforward to you, but it's actually pretty complicated. And so we're going to use our subject matter experts this afternoon to help consumers better understand that process and to better understand their insurance policy. I do want to say that the inspiration for this particular episode came to us from a New Hampshire consumer, and we are pleased that we're able to take the suggestion that consumer provided us and hopefully put together a program that's going to help a lot of other consumers. And if you have a suggestion as to a topic that you think that we could cover, don't hesitate to contact us. Andrew will provide some contact information at the end of the program. But at this point, I'll turn it over to our team, beginning with James Fox.
Thank you, Commissioner. Yes, this did come from a consumer, and it reminded me first. So his statement to us is that he didn't think that the average New Hampshire resident really understood policy design as to property casualty policies and what they're really getting when they purchase. And then that when we talked about it in house, the Supreme Court, when it interprets policies, and they're the final arbiter of what an insurance policy means, always says that they assume that the policyholder has read the policy. So we thought we could do this webinar to help all the New Hampshire policyholders be better able to approach a policy, because I think a lot of people, if you've never really read a policy, you might be confused or you might get lost in the policy. So we're going to start with, we're going to do auto, and we're going to do homeowners. I'm going to also talk to our new consumer leader, Robin Tierney. So we're going to start first, P&C policies. So all property casualty, so that's property insurance, and then casualty means liability. So property and liability insurance policies are all pretty much designed exactly the same. So you have, from a structural standpoint, you get a deck page, and that's the piece of paper that your agent will fill in, or your insurance company will say basically what your limits are going to be for each type of coverage that's provided. So that tells you how much. Like you might have, I have $100,000 in coverage. That would be how much money you'd get per accident. And then you'd have the base policy. And so the base policy is a policy that the insurance companies draft for basically all 50 states. And it tells you exactly what you're going to get in terms of coverage for, say, for auto policy, what you're going to get for auto. We're going to get into that. And then the last thing you get that makes, and this will make up the whole policy, is your endorsements. So your endorsements are designed to change the base policy. And that usually is the result of either a state law that says the insurance companies can't do something, or if there's something that's specific that so that could either be a statute or a case law, or there's just something insurance companies have decided to not do anymore, and they don't want to change the whole base policy, or they don't want to do it in certain states. So they basically will make an endorsement, and that endorsement will change the base policy. Occasionally, endorsement might be designed to change another endorsement, but that's very rare. It's basically, it changes the base policy. So that is what when, say, an insurance attorney talks about a policy, that's what they really mean. They mean the deck page, that's part of the policy, the base policy, and then the endorsements. And then, so that's how they're structurally designed. So then the next issue is how are they designed to operate? So function. So that basically, if you would start, after you look at your deck page and see what kind of coverages you have, because that'll detail them. You don't have to have all the coverages. Then you would go to your base policy, and then you'll always see basically a coverage grant. And in P&C, it'll basically usually say, we're going to cover accidents. So an accident is, what the word usually means. And it's not an accident if it's like inherently injurious, then it wouldn't be an accident. But other than accident is an accident, some fortuitous act. And then after that, you'll have a bunch of conditions that you have to live up to about basically giving the insurance company notice and cooperating. Those are the two biggest. And then, so if you don't do those things, you might lose coverage. And then the other thing they do is they have exclusions. And then all of those exclusions basically limit that coverage grant. So the coverage grant, say, we're going to do auto, would say any car accident. And then after that, you'll have a bunch of exclusions that for that policy, you're not going to apply to that car accident, so that you would not get coverage. So that's how you should always read your policy. Read your coverage grant. So each section will have a different coverage grant if you have multiple coverages, and then read your exclusions, and it'll say, oh, I have coverage for car accidents. That's wonderful. And then later you'll find out, oh, for intentional acts, I don't have coverage. So you gotta read the whole thing through, but that's basically the design of it. And that's every P&C policy. So based on what we've just gone through so far, you should be able to read any policy. And if you do read your policy and you still don't understand, you give the insurance department a call, and I will talk to you, and I'll work on it with you personally. But now I'm gonna throw it over to Robin to do a little bit of discussion about her unit, the consumer unit.
Thanks, James. So the consumer unit is here to help educate, navigate, and investigate with consumers. As far as education, we like to attend events around the state with Andrew and AJ. We help you navigate the complexities of insurance and answer any questions you may have. And as far as investigating, we're here to help you if you have concerns with your insurance carrier, to help with coverage questions and claims. And I'm going to throw it over to LuAnne.
Actually, James is going to kick us off with auto.
Yep, back James. And I would say, I always like to give a good plug. The consumer unit does a fabulous job. So if you have a formal complaint about an insurance company, you can fill out a complaint form. Or if you just have questions about your coverage, you don't want to call me. You can call the consumer division, and they help out. There's a whole team of people, and they do a great job on a daily basis. But the first policy we're gonna discuss today is the auto policy. It's a policy that I think it's probably next to homeowners, or maybe right there with it. Most people have. So your auto policy has 4 parts. So you have liability coverage. So that's if you do something to hurt someone else or damages their property, that's what's going to trigger for that. Then you have uninsured motorist, BI, so that's bodily injury. So uninsured motorist in the state of New Hampshire only applies to bodily injury. So if an uninsured motorist hits you, then you can use your for your physical injuries. And then we have med pay, and med pay is the only no-fault insurance in the state, and that's basically if you get into a car accident and you can use your medical payments coverage. It's usually about $1,000, and that's usually designed for things like co-pays, deductibles, like if you get hurt, because it's basically quick money for you. And then the other big piece so that's really all designed for liability issues. The other big piece is physical damage coverage. So physical damage coverage is your comprehensive coverage, which pretty much is damage to your auto, other than for collision, which is if you collide with something. So that basically makes up a full New Hampshire insurance policy. If you're from Massachusetts, you have a no-fault policy, which is different than a New Hampshire policy. So we won't be getting into that. So the first thing we talked about above, remember we already talked about that, is a coverage trigger. So an auto policy provides coverage for accidents. So if you purchased an auto policy, that's what you're going to get. You're going to get coverage for accidents, and then you're going to have you're going to have conditions like every policy has, which said you have to give the company notice immediately after the accident, and you have to cooperate with the company. And I think the consumer division would tell you, and I would tell you, the number one thing you can do is if you get into any accident and you have damage to your car, or you think you have a bodily injury situation, you should call your insurance company and report it, and then listen to them. So in that sense, in terms of the conditions, you don't have to memorize them or anything like that. The one thing you need to remember, if you want to make sure you have the highest likelihood of having your claim covered and covered to the full limits of your policy, is to call your insurance company and say, I was in an accident. I'm not sure what to do. What should I do? And then whatever they tell you to do, they'll probably record it. Follow their instructions. You can't get in trouble doing that. And the reason I say that is, if you have we have these auto policies, but behind them are statutes, and the insurance companies have to live up to the statutes, but they only have to do it up to the minimum mandatory limits. So let's say, for example, you have a 250,000 per person, 500,000 per accident coverage. If you don't follow the instructions of the company, in some cases, you might at least potentially, they might be able to say we are allowed to drop you down to mandatory minimums. You might go from a $250,000 per person injury to a 25,000. So you wouldn't want to be in that position. So always follow the company, and if what the company tells you to do you don't like, then you should call the insurance department and say, the company's told me I have to do this. This doesn't seem right, and we'll work on it with you. So then the next thing which you should do is read through your exclusions, because that's the piece that can basically exclude coverage for you down to that mandatory minimum. So you could go from a $250,000 per person, $500,000 per accident coverage down to $2,550, which is a huge drop, and so always be careful. And the one I thought actually two we thought we'd talk about. One, which is something that comes up all the time, is if you do something intentionally. So if you go get in your car and you're mad at, let's say, James Fox, you're mad at me, and you decide you're going to run me over, then your policy is not going to respond, because that's excluded. So that's an intentional thing. Usually they won't exclude you in New Hampshire by saying it was an intentionally, usually, because there's a long line of cases that says it's a subjective determination whether you actually intended the injury. So that actually occurred. So that's a more difficult standard. So basically what will happen is they'll say it wasn't an accident. And then the courts have said if it's inherently injurious, then it's not an accident. So if you decide to get your car and run me over, that's going to be inherently injurious. Pretty much any physical violence towards someone else in any way that's you intend to do, that's not an accident. That wasn't like, oh, I didn't know that was going to happen. The actual act is inherently injurious. You're not going to get coverage. So second one, though, that probably we thought was a little more important to talk about was in everybody's policy, there's something called a public and livery conveyance exclusion. So this is one that when I was a teenager, I worked at a pizza shop and I delivered pizzas, and I'm not sure what the policies were like in the 1990s, but they were actually probably not that different. And one big exclusion that all of these kids, so if you have a child or you do this, delivering pizzas is I always get it's delivery conveyance. So it's a conveyance either way. So basically, if that's what you're doing, that's not covered by the policy. And so you might think in one instance, like, well, that doesn't seem fair. All these kids, are working doing a pizza delivery. Why isn't that covered? And the reason it's not covered is something we didn't talk about, is that when we're talking about policies right now, I meant the personal auto policy. So that's a personal policy. So the way all P&C policies work is there's two types. There's a personal lines policy, and the insurance companies, they rate that and decide how much you should pay based on your personal life, what the things that you do in your personal life, how risky are you as a person personally. And then, but the other option is the commercial lines policy, and that's basically how risky are you in what your commercial endeavor. So that's a different analysis. So those two policies are always kept separate. So if you think about it, if you're delivering pizzas, that's a business. So they don't want that covered under a personal lines policy. Now, going back to what I said earlier about if you get in an accident, not every policy is the same, and not every insurance company interprets the policies exactly the same. So if you're doing something like, if you're a pizza delivery person, or there's another statute, but it's very similar, the Transportation Network Company statute that says that insurance companies can exclude that activity, Uber basically. You should always the best thing to do is read your policy. When you see something like, oh, this might apply, no matter what the topic is, now you should call the insurance company and say, hey, I'm going to be delivering pizzas. I just took a job. I'm in college. I just took a job and I'm going to be delivering pizzas. Do I have coverage for that? And if they say no, they might be able to add the coverage in for you. They say, okay, well, thank you for letting us know. If you want, we can add that in to cover you. Or they may say, you need to get some commercial coverage, but you at least know. You don't want to ever old boss in coverage, never stick your head in the sand when it comes to insurance. You want to know exactly what's going to happen. So that is the best thing you can do. But I would say read your policy that way. Read your coverage grant. If you have the conditions, I wouldn't focus on them, but I would also read your exclusions. And then after you read your coverage grant, you read your exclusions. Always the endorsements are stuck on the back of the policy. And if there's something think might happen, might be a concern of you, and if it's not, then we go read the endorsements. And if you understand it, that's great. And then proceed forward on that basis. And if there's any confusion, call your insurance company, ask them for help, or you call the insurance department, ask us for help, and we'll help you. We'll help explain it to you. So, because we want everybody to have full knowledge of exactly what they have for coverage, because it isn't like if you have a auto, that means you have coverage or anything to do with the auto. It basically, there are risks. If you think about it like a bundle of sticks, there are risks. Each stick is a risk. There's certain risks the insurance companies will take, and then they take those risks and you pay them for that. Other risks they don't want to take, so you have to keep those sticks yourself. So you want to know, what sticks do I have and what sticks do they have? Because the insurance premium you pay is only going to provide you coverage for the sticks that they have. So it's very important. Now, that's pretty much how you read an auto policy. The next one that LuAnne's going to discuss, who's the head of our forms team and knows more about policies than I do, is the homeowners policy, which is a much more complicated policy. That's why I did not do that one. So she's going to go through that, and that's basically if you're personal, for a person, you have auto. That's going to cover anything to do with the auto, which is a huge risk for you, and anything else in the world that the insurance company is willing to take on from a property or liability perspective is in either your homeowners or your renters. So I'm going to now shift it over to LuAnne to discuss the homeowners policy.
Thank you, James. Welcome, everybody. Today, I'm going to talk about homeowners policies. Everyone at some point in their life most likely will either own a home, rent an apartment, or own or rent a condo. And for each of these scenarios, there's a separate policy that's going to cover your needs. All of the policies, whether it be a homeowner's, a renter's, or a condo, the policies themselves are actually split into two different sections. There's section 1, which is your property coverage, and I'll go through that with you shortly. And then section 2 is your liability coverage, which is going to be a little bit different from your auto policy as far as who is covered and who isn't covered. And I'll get into that in just a bit. So I wanted to first start by showing you the deck page. As I'm talking, I will share my screen with you. This is the auto deck page, which James covered. And now we're going to the homeowners declarations page.
You're on homeowners, LuAnne.
Yes. Yep. We're on the homeowners section.
Perfect.
So right here, the section 1 coverage, it's easier to see it on the declarations page as I go through it. Each one is listed out for you, A through F, and that's what we're going to talk about now. Your coverage A is always going to be your dwelling, which is right here. And the dwelling is exactly what it says. It is just for your house itself. There's no coverage for your land at all with a homeowner's, renters, or condo policy. It's just the house. And over here, under this column here, is going to be the limit of liability that applies to each of the coverages. So the amount of coverage that you want for your dwelling is going to be how much it would cost to rebuild the dwelling. It does not speak to market valuation or anything like that. The insurance company wants to know, if you have a covered loss, how much will it take for them to rebuild the house for you the way it stands today? So your agent and your insurance company will work with you to determine how much coverage you need to rebuild your dwelling. And then your B, C, and D are always going to be a percentage of whatever you reach for your coverage A. That is your starting point. So your coverage B right here is your other structures coverage. That will cover any other structure on your premise not attached to your house. For example, a detached garage, or that type of thing. If your garage is attached to your house, it will be built into the coverage that you select for your coverage A amount. So your coverage B amount, your other structures, is generally 10% of your coverage A amount. If you need more, you can purchase more through an endorsement, but this is built into every policy as a standard provision. Then we go to coverage C, which is going to cover your personal property. That's your stuff. That's your silverware, your furniture, your dishes, your stuff. Anything that you own is going to be covered here. And again, it's usually a percentage of A. It's usually 50% of A, but a lot of companies nowadays, to attract business, they will automatically give you more than the base of 50% of A. They'll give you 70% at no extra charge. Again, if you need additional coverage, this can be purchased by an endorsement to boost if you have way too much stuff and you need extra coverage.
We have a comment in the chat that the columns that you're referring to aren't being shown.
The columns. So can you see the deck page itself?
Just the very top, it says Homeowners 3 special form.
But when I scroll, you don't see me scrolling?
No.
But how is that if I'm sharing my screen that it's not scrolling?
I think you might be sharing the wrong screen, perhaps. I'm not sure. Maybe we can make these forms available after the webinar to anyone who'd like to look at them.
Okay. All right. I apologize for that.
Oh, no problem.
I will stop sharing. I don't know why that wasn't scrolling.
Yeah, maybe try it again. That's all.
We'll just make those available after. I apologize for that. So your coverage C is going to be your personal coverage, and that's covered worldwide, by the way, with some exceptions. If you have your stuff in a storage unit, some policies now will specifically exclude that. They're wanting you to purchase a buyback endorsement to cover that because there's a lot of storage facilities nowadays. Your coverage D is your last of your property section coverages. That's loss of use. So if your home, condo, or apartment is uninhabitable due to a covered loss and you need a separate place to stay, maybe it's going to be a hotel or whatever, they will actually pay you loss of use. It's usually 20% of your coverage A amount, and that will cover you, get you and your family by while your house is being repaired. So that's a little bit about your section 1 coverages, what is covered, make sure that your limits are always adequate. The other thing about section 1 is you're going to have what they call a deductible. You get to pick that along with your agent. They'll help you. A deductible means what you pay out of pocket before your insurance company will step in and pay the rest of the loss up to the policy limit. You want to know that you need to have that amount of money available, at any point in time for an unexpected loss. So for example, if you have a $1,000 deductible and you have a covered loss, your insurance company is going to ask you to pay the first $1,000, which is your deductible amount. Then they'll pick up the rest up to your policy limit. The lower your deductible, the higher your insurance premium, and vice versa. So keep that in mind if you have a policy and you're saying my premium is too high, consider raising your deductible if it's feasible. Quickly, I wanted to just discuss what's really important about another important part of property coverage is the difference between replacement cost and actual cash value. So you're going to want to always have your personal property covered at replacement cost, if possible. There's an endorsement for that because your base policy is going to cover you at actual cash value. Your agent will offer you a replacement cost endorsement, and that would be very well advised to take. That means in the event of a covered loss, instead of them depreciating all of your personal property, you will actually get enough money to replace the property itself. That is section 1 in a nutshell. Section 2 of your homeowner policy is your liability, and that is broken into 2 parts. The first part is coverage E, which is your personal liability, and that is going to cover your liability, your legal liability on and off premise. For example, someone comes over to your house and they fall down your steps. That would be covered because it's an on-premise liability. Then you're walking your dog to the dog park and there's an incident with your dog. That is off-premise liability. It's your dog. You're liable for it. There would be coverage for that as well. Your liability coverage is not tied to your coverage A amount. You can select the limit of liability you want. The minimum is 100,000, and companies go 300,000, 500,000, and so on. The last section of your liability is coverage F, which is your medical payments to others. And that is exactly what it says. It will never cover the homeowner. It will be available for other people, not the homeowner. For example, your neighbor's child comes over and falls off your swing. That would be what medical payments to others would cover. It's important to note that the legal defense is included by the insurance company. That is in addition to your policy limits. So if you were to have $100,000 liability coverage and there was a lawsuit that they defended you for, it will not come out of that $100,000. You will have the full $100,000 for a settlement if needed. I encourage you to talk to your agents about endorsements. There are way too many endorsements available today to go into in this webinar, but I can tell you if you have a scenario that requires coverage that isn't covered by the base policy form, most likely there is an endorsement that will help you. And then I wanted to just talk briefly about a topic that comes up often for homeowners. It's water and whether or not water damage is covered by your homeowner policy. And the answer is yes and no. That's the answer. It's really going to be dependent as to what is causing the water damage. I'm going to start by talking about what is usually never covered by a homeowner's policy, and that is flood. Flood, surface water, waves, tidal waves, tsunamis, overflow, spray from any of these, whether or not driven by wind, including storm surge, generally speaking, is never ever covered by your homeowner's, renters, or condo policy. It's really important that you know that. And water that backs up through sewers or drains or overflows or is otherwise discharged from a sump pump, or related equipment is generally not covered. There are some companies that will offer you a buyback endorsement for that specific loss, but you're going to want to always read that carefully. And then the third one that's not covered is water below the surface of the ground. And that could be water that exerts pressure on or seeps in, leaks or flows through the building, sidewalk, driveway, patio, foundation, swimming pool, or other structures. That will generally never be covered by your homeowner's policy. And all of these situations apply whether or not it's caused by an act of God or if it's more from a man-made thing, for example, a dam or a levee or a seawall or any other containment ruptures or breaks. That's not going to be an act of God. But generally speaking, all of those are not covered. Speaking of flood, I wanted to mention that there are programs available at the federal level to purchase a flood policy, as well as private flood insurance companies, which can be purchased right through your agent. Some water damage is covered, and I'll go into those now. If you have freezing of a plumbing, heating, air conditioning, or automatic fire protective sprinkler system or a household appliance that discharges, leaks, or overflows, that would be covered so long as you took precautions to reasonable care to maintain heat within the building, or shut off the water supply if you're not going to be there. For example, if you have a secondary home and you're only there in the summertime and you go to your primary home someplace else and you forget to keep the heat on or you forget to winterize the property, the pipes freeze and break. Generally speaking, your homeowner's policy is not going to respond to that because you did not take adequate steps to keep the heat on or to keep to winterize the property. The last one I wanted to talk to you about is the mold, fungus, and wet rot, because that is a common complaint that we get here at the insurance department. That will be covered so long as it is hidden within the walls, ceilings, or beneath the floors, and as long as it's a sudden and accidental discharge. So you didn't know about it. If it's something that you knew was there and you can see it very clearly and you choose to do nothing about it, and it becomes more damage than it was, they're not going to cover that. But if this is a hidden situation and it's caused by a sudden and accidental discharge, by all means, there is coverage on your policy for that. That's like James mentioned earlier, there are statutes that insurance companies are required to follow, and that is covered in one of the statutes. Just in conclusion, before I throw it back to James, I just wanted to encourage everyone to read your policy. And if you have any questions, please reach out to Robin's team. Carry adequate limits, add necessary endorsements, shop around, consider a high deductible if that's possible, take advantage of discounts, don't ignore flood, and consider purchasing an umbrella, which I thought was an awesome segue back to James.
Thank you, LuAnne. So I have a few things. I took some notes when LuAnne was talking that I wanted to mention about those topics too. When LuAnne kept saying to talk to your agent, so you can buy a partner insurance policy through your agent or directly. If you're an insurance expert, you probably can buy it directly. But as LuAnne said, there are many endorsements. So it's probably best to have an agent who does work for the insurance company, but still helps guide you through what the insurance companies offer. So I think that's a great idea for most consumers to do. Also, LuAnne mentioned MedPay for homeowners. So I talked about MedPay for vehicles. So in MedPay for vehicles, you do get the coverage as the driver. That's a statutory obligation of the insurance company. So there's statute that says they have to do that because auto is the most highly regulated. Homeowners is, but only for the property piece. Homeowners policy does have MedPay. It's just different. It's a contract-based coverage. She mentioned flood. The thing we can learn from flood too, in addition to that it's not covered, is that, remember we talked about the sticks, what risks they want to take on. Insurance companies do not want to take on the risk of a flood because if you think about it, flood doesn't usually, it can, but it can happen. It can take out a lot of houses. Which would then put an insurance company under. So that is too big a risk. It's not that they just like, oh, we don't like flood as damage. It's too big a risk for them to take on. So that's why they don't want to do that. And the other little piece that is really important is that LuAnne mentioned that mold is covered, and then she mentioned sudden and accidental. And some people would say, well, how is mold ever sudden and accidental? And one of the things you should always think about in your insurance policy when you read it is that it's interpreted by courts, and courts always have the same standard, is that basically if it's ambiguous, there's more than one way to read it, and one of the ways to read it provides coverage, and the insurance company must cover it. And even on words where you would think, well, sudden means fast. So for example, with that, the courts have said it doesn't mean fast, at least in New Hampshire. Some states it does. It means unintentional. You didn't know it was happening. So particularly if you get a letter saying a denial letter, I would probably, unless you're really confident, you might want to reach out to Robin's team and say, this doesn't seem right if it doesn't seem right to you, because she can probably help you with that. And the last thing that I always find interesting is that we always say actual cash value. And there's probably a lot of different ways people could say what actual cash value is, but insurance land, the only really way we do it is basically we say replacement cost, and then we say minus depreciation. So that's basically how they always determine actual cash value. There are some where they've scheduled some stuff basically saying you're going to get this side of the other thing, but actual cash value usually is just always means you take the replacement costs, and then what you had is this old, so we're going to take this much depreciation, and that's what you get. And another thing in homeowners to always try to remember is that if you're going to be rebuilding, they initially talk ACV, and then you have to actually do the rebuilding to get the replacement cost. So then basically you need to go through a little bit of a process for them to issue checks, but you will get the replacement cost. And that's you should always go for that option. Now, the last thing we thought we'd talk about is we talked about the main two, the homeowners and the auto, and there's a lot of other policies. You can buy policies, ATV, there's a ton of other policies that are P&C policies. But I was thinking about this. The third one we thought we'd talk about is umbrella. So you have your primary policies, your frontline policies, a lot of different words, which is your primary layer. And then if you have certain limits, you couldn't get like a minimum 2550 auto policy, then get an umbrella over it. But if you have a certain higher limit policy, then the insurance company usually say what's called an umbrella. And umbrella policy basically will give you the intent of it is to give you higher limits. So if you have assets you're trying to protect, particularly if you have assets you're trying to protect, two things that come up. You'd want higher limits. You want to think about an umbrella policy. And you might go to an agent to pick one. And the other thing about umbrella is it's like the best deal in insurance. The cost of umbrella policies are very minimal, and you get a much higher limit. Now, there are two basic umbrella policies you can purchase. The simplest one to purchase is the following form policy. So they basically, you list out all your underlying policies, and then that policy they sell you will follow those policies. So you'll know exactly what your coverages are if you've read your underlying policies. So I think it's the easiest. You'll know what you're going to get for coverage because you get exactly what that underlying policy. And I view that as a true umbrella. So basically, you have all these underlying policies, and then they're putting an umbrella over that to just give you higher limits, exactly those limits, so exactly the scope of coverage. The other type you can get is kind of a standalone umbrella policy form, which says this is what we're going to give you. And so those might have different levels of coverage, so scope of coverage. So they might not cover everything that your primary layer covers. So if you're going to go if you decide to go that way, then in my mind, you definitely want to talk to an agent, because you don't want to have a situation where you're like, oh, don't worry, I have a lot of assets, I'm protected. I have my primary layer up to 500,000, say for auto, but then I have a much larger umbrella. So an umbrella, just be clear, we talked about a lot of statutes for that auto. So like, oh, that's required by the statute. That's required by the statute. An umbrella policy is not considered, and this was decided by the legislature long ago, is not an auto policy. It is an umbrella policy that is above an auto policy. So they don't have to follow all the rules that the auto policy does. Probably the reason for that was that those rules are really designed for the 25-50 layer, and then above that they can vary some. So the umbrella is way above that. So if you have assets and you're trying to protect them, you really should talk to an agent about exactly what would be covered in relation. So I would ask them, okay, I have these primary policies, you've sold them to me. I have this umbrella policy. I want to make sure I understand, because it's complicated. What are the limitations of the umbrella policy I'm purchasing in terms of the scope of coverage that my primary layer has? And then once you're covered with that, once you're comfortable with that, then you will be, in my mind, as fully protected as a personal lines person can be. You'll have all your primary layers, and you'll have your umbrella, and you'll have your assets will be protected. I will say there is a theory out there. I mean, it's not an official NHID theory, but that if you have no assets, there's less need for an umbrella policy, because the umbrella policy is for people with more assets. But that doesn't mean it's still a great value. So if you want to be more protected, even if you don't have higher, more assets, you can buy one for a very modest amount. Just like a lot of people don't know, since we're talking about these things, that like lowering your deductible using that much more isn't a huge ticket item either. People think it is, but it's not really. So I would always suggest, if you want to be fully protected, have a low deductibles, and have an umbrella policy, and have all the primary layer policies, and you'll be fully protected. And I think that's a great idea. And again, the purpose of this webinar was to try to explain policies, design, and how they function to you. And if you have any questions, you can give me a call, and I'll be happy to discuss them with you. My number is 603 271-2502, and I'll be happy to go through them. But I'm not sure who I'm throwing it to next. But I think I might be throwing it back to the Commissioner.
Well, Commissioner Bettencourt had to break off from the meeting, so I'm happy to ask if there's any other questions. We can address those in the chat, or I posted the information for our consumer services unit in there. You can call us at 603-271-2261, or reach us at consumerservices@ins.nh.gov. I think Joseph is typing, so we'll give him a second. Any final thoughts, Robin, James, LuAnne? Okay, well, there's a question that says, when you indicated earlier that other sections are usually a percentage of your coverage under Section A, does the coverage in these sections come out of the total covered amount in Section A?
Nope, they're separate.
You're always going to have the limit that you select for coverage A, the full amount, and then B, C, and D will be percentages of that, but it will never come out of your limit that you set for coverage A. They're separate. Good question. Very good question. Thank you.
Okay, thanks, Joseph. Any other questions? We're happy to entertain them now, or again, you can reach our consumer team. You can also reach us at our communications office, and I will put the email for that in right here. It's communications@ins.nh.gov. And we'll be happy to forward those on to the appropriate person. I think Joseph might have another question. Give him a second to type here.
No pressure, Joseph.
And if you guys have any final thoughts, Robin, if you want to plug the consumer team a little bit more, by all means, while Joseph's typing, we have plenty of time for that. Yes, if an umbrella doesn't have much in the way of language, does it cover everything in the base plans?
Yeah, it's a following form, and that's no language. They just say we're going to agree to follow the underlying forms, and then the more language you have, the more it's going to limit, most likely. So you want to read the language closely, and if it's confusing, that's why you should talk to the agent. They're not highly regulated like say we talked about the homeowners for property. That's highly regulated. It has to actually track a statute that's in our statutory scheme, and then auto for liability. So the homeowners, the property is in our statute. The actual policy is written into our statute, and for auto, it's the Department of Safety statute. But those have to track that statute directly. An umbrella, it's just a contract. So each company can have a different one. So you might want to do your research on particular companies too and see which company you want to be with in that case.
Well, sorry, go ahead, James.
No, I was saying if they're putting language in, they're not putting language in to expand the coverage they're providing you. It's usually to limit it. So the more language you should see, the more close you should read it, because it means that they're limiting you.
That's a good point. Well, we appreciate that. All right. Well, we thank everyone for joining us. If you have any questions, by all means, reach out to our communications unit or the consumer services unit, and we'll be happy to help you out. Next month, we'll be talking with one of our actuaries, and he'll be discussing, how insurance is priced. And we hope you join us for that. Well, it looks like Victoria has a question, so we'll wait for Victoria. Oh, she says thank you. Okay, well, we appreciate you guys for joining us, and stay tuned next month. And of course, this and all of our webinars are available on our YouTube page. And we thank you for joining us. Appreciate you, and we'll see you next month.